Okay. Hello, my name is Jennifer Brunello, and this is my presentation on whether or not Cabela's and Bass Pro Shops should be merged or maybe acquired. So Cabela's Incorporated is a direct marketer and specialty retailer of hunting, fishing, and outdoor equipment merchandise, and so is Bass Pro Shops. The company was founded by Richard and Cabela in 1961, and when they went public in 2004. That fiscal year, their revenue reached $1.56 billion, and it grew 50% from 2001. As of December 2013, the company has performed strongly in the $646 billion sector, with a stock price gain of almost 50%, and consolidated revenue moved up 14.8% year over year to $850.8 million. Earnings per share was 70 cents higher than the previous year's earnings of 60 cents per share. They have a real estate market called Trophy Properties, and they have Outdoor Adventures, which does hunting and fishing trips. They have a gun library, and they have World's Foremost Bank, which is their credit card company. And they have Cabela's Club Visa credit cards that they issue. Its direct marketing operation is one of the largest in the U.S., and their mail order catalogs are sent to all 50 states and 120 countries. And they mail more than 120 million of the catalogs. In their first year as a public company, they mailed more than 120 million catalogs. Their stores are like a hunter's and fisherman's paradise. They operate nearly 60 stores in more than 30 U.S. states and Canada, or 7 stores in Canada. Located mostly in the Midwest, the stores are as big as 247,000 square feet, and they have features such as waterfalls, aquariums, shooting galleries, and banquet and meeting facilities. They even have mountain replicas in some of them. Bass Pro Shops is a lot like Cabela's, but it is a private-owned company. They operate around 85 stores in the U.S. and Canada. They sell boats, firearms, equipment, and apparel for most outdoor activities. And their shops have archery ranges, fish tanks, bowling lanes, billiards, and dining areas. They reel in customers with their catalogs. They have an online store and TV and radio programs. The first Outdoor World store opened in 1981 in Missouri, and it has been one of the state's largest tourist attractions ever since, almost like Disneyland. Bass Pro owns Tracker Marine, which manufactures boats, and American Rod and Gun, and a sporting goods wholesaler. They also have an 850-acre resort in the Ozark Mountains. The founder of Bass Pro is John Morris, and the Forbes list of the largest private. It's on the Forbes list of the largest privately owned companies in America. At the end of its 2014 fiscal year, Cabela's. Oh whoa! Oops. Sorry, I made a boo-boo. Anyway, Bass Pro Shops sees about $4.25 billion in sales annually, and they employ about 20,000 people, just like Cabela's, maybe a little bit more. There's definitely some recent news about a possible merger or an acquisition of Cabela's, and Bass Pro Shops is making a bid, or looking to make a bid for Cabela's. There's a few companies that are actually, but Bass Pro is one of the main ones. Some of the other firms that are interested in bidding for Cabela's are KKR and Company, Hellman and Friedman, and TPG Capital. Meanwhile, Bass Pro Shops has been working with JP Morgan Chase and Company to explore a bid for Cabela's. Some of the pros and cons. Herzl Capital Management, who owns 2% of Cabela's, has already been exploring divesting and possibly selling the company's credit card unit and property. Elliott and Associates had to disclose that they had an 11% stake in Cabela's, and now they are pushing the company to consider options such as selling to a private equity firm. Despite its growing revenue, Cabela's performed under the industry average in the last year. Some of the strengths include they have revenue growth and good cash flow from operations. However, some weaknesses are declining net income, higher debt management risk, and disappointing return on equity. In my paper, I I had a list of pros and cons. I'll go over that in a minute. The revenues have slightly increased since last year by 4.6%, but it hasn't trickled down to the bottom line, which is shown by a decline in earnings per share. Cabela's sales have slumped as the surge in gun sales has fallen off. It is scaling back its expansion plans after discovering that its new superstores are actually taking sales from its other stores. So I think they're opening a bit too many stores. With same-store sales falling 4.2% and profit dropping 19% in the most recent quarter. Even though their sales and profit have declined, shareholders such as London Company Virginia and the Matthew 25 Fund, who own almost 7% stake combined, see a strong brand with long-term expansion prospects. They also have a lucrative credit card business, which I already mentioned, and it has almost $5 billion in loans, as well as real estate holdings worth about $1 billion. The company's total market value is $3.2 billion. In September, Cabela's laid off 70 people already, and I think it would just be devastating for them to lay off any more. So I decided for them not to do either a merger or divesting any part of their company. I decided that they should probably just excuse me, I'm sorry. I decided that they shouldn't do either merge or divest, that they should just hold off a year to 3 years and see how they're doing, and not open any more stores for that time period, and just maybe cut some expenses back, and I think they can come back from this slump possibly. They employ so many people that it would just be devastating to like whole cities if they were to merge or divest. And major shareholders are talking about some kind of strategic alternatives for the company, which means an overhaul is probably in the works. And such an overhaul could include selling the credit card business, but I would choose, since it is so much money and so many assets to them, that they shouldn't do that. If they were to spin off their credit card business known as Cabela's Club, it would expect probably about 15 bidders with checkbooks wide open. And then I have their direct competitor comparison here. It was in my paper too. You probably can't see it, huh? Anyway, it's important to know that a sale is not a done deal, and changes are probably coming to Cabela's, but they don't necessarily mean they're going to sell it to Bass Pro. And Wall Street analysts say that the Cabela's may even be shopping around to a private equity firm, and which means that if this happened, the company would buy out the shareholders and offer them a large premium over the current stock price, and then take the retailer off the public market. And when a private equity firm comes into the picture, managers often whack expenses ruthlessly. And like in that case, in September they had that happen, and Cabela's already had to lay off 4% of its corporate workforce as part of a corporate office overhaul or restructure and reduction. This affected nearly 70 employees. I conclude that right now the company should not merge or divest. This company employs so many people that it would be devastating to whole communities. In 1 to 3 years, if their revenues are still declining, then further action could be taken at that time and maybe reassess what they need to do. And I think instead of catalogs being sent in the mail, they could also include social media as well, so they can get more customers and some new customers. And it's just a better way to reach customers nowadays. I think they should definitely hold off on opening any more new stores for the next few years until they're more stable. And that's all I've got. Thank you.